Hey everyone, Netflix is scheduled to report quarterly financial results after the markets close on Thursday, July 18th. Investors interested in Netflix stocks are asking if they should buy Netflix before or after the earnings release. I'll answer that question in this video. I'll also provide a preview of what to look for from Netflix in its upcoming earnings release, the big items you should pay attention to. Additionally, I'll provide the trend lines in its most critical metrics, including subscriber growth, revenue growth, operating profit margin, and free cash flow. All in this short video, so let's jump right in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So for fiscal year 2024, Netflix is forecasting revenue growth of 14% at the midpoint, and better than expected operating profit margins of 25%. And the company's longer-term strategy includes 3 key pillars, which I'll touch on a little bit later in the video. But before I do that, I wanted to touch on its critical metrics and the trend lines in those metrics, starting with year-over-year revenue growth. Now, 2 things I want to highlight with revenue growth, and that is the growth rate is solid, and the second derivative is positive. Let me go over that here. So in its latest quarter, first quarter of 2024, the company delivered 14.8% revenue growth up to $9.37 billion. For the second quarter, they are forecasting 15.9% revenue growth. So not only is the rate of growth nice at 15.9% for a company already at the size and scale of Netflix, but the second derivative rate is increasing. And you can see that going back several quarters now, from 2.7 to 7.8 to 12.5 to 14.8 and now 15.9. It's difficult to find companies with this level of second derivative growth and to find these kind of companies that are also increasing profitability. You're getting that nice 1-2 punch from Netflix. That's why Netflix has been one of my top stocks to buy all year long. I recommended Netflix as a top stock to buy on December 30th, and Netflix stock has performed very well here in 2024, rising from a little over $480 per share all the way up to $685 per share. And despite these increases, I've kept Netflix stock on my list because of the underlying fundamental performance that has justified these price increases. Next, looking at their operating profit margin, 28.1% in the first quarter of 2024. That was up by 1/3 from 21% in the first quarter of 2023. In the second quarter of 2024, they're forecasting 26.6% operating profit margin, which will be an improvement from 22.3% in the second quarter of 2023. So revenue, profitability increasing year over year for Netflix, which I love to see from an investor standpoint. The next critical metrics I pay attention to with Netflix is memberships, subscribers. How is that trending? Are they improving? And the answer is yes. 269.6 million paid memberships or subscribers, and that was up by 16% year over year. Now remember what I said about second derivative growth. You see the same trend here with memberships, 4.9% to 8% growth to 10.8% growth to 12.8% growth to 16% growth. So not only nice increases on the top with global paid memberships increasing, but also increasing at an increasing rate. I love to see that. Again, I'm mentioning that here for the second time in this video because of how important I view that in my framework for investing in stocks. This demonstrates excellent customer appreciation, and it demonstrates that customers value your product. Among all of the things that customers can buy, they are increasingly choosing to buy and subscribe to your product. Among all of the choices they have available, they're increasingly coming to Netflix. Okay, so that's a really good sign. I like to see this. And finally, free cash flow. $2.137 billion in free cash flow in the latest quarter. The company several quarters now delivering over 1 billion in free cash flow. It wasn't that long ago where the company said that they plan to be free cash flow positive, and now they're consistently generating over 1 billion in free cash flow after all of the investments in content to support growth of the subscription service. You can see that this free cash flow is coming at the same time of increasing revenue and increasing subscriber. So you're noticing that the increase in free cash flow is not coming at the expense of cutting costs and cutting delivery of content and cutting the service you're offering your customer. You're not lowering your customer value proposition in order to increase cash flow. This is coming as a result of the money that they are spending on improving the service, returning more than they're spending. So their investments are coming back in a good fashion, and that's a good sign as well. All right, so now I want to come back to the 3 pillars for Netflix strategy for long-term growth. And I agree with almost all of it except for one part, and I'll highlight that when I move on here. So they say that to sustain healthy growth, they want to improve the variety and quality of their entertainment with more great TV shows and movies, a stronger slate of games, and must-watch live programming. Now, out of all of this, the area I disagree with is games. You'll notice that over the last couple of years, Netflix is investing in games and interaction with customers, and I'm skeptical of this strategy. I'm not thrilled that Netflix is investing in games. I think they're great at making content, movies and TV shows. I would want them to spend more on that rather than going into games. Now, I could be wrong. Of course, I'm more likely to be wrong than management here. Management knows more about their business and the success of their business, but I'm just not as confident in this category as I am with Netflix investing in movies and shows, because that's something they've proven to me over a decade or more that they're really good at. They're really good at making movies and shows. So I want them to do a lot more of that and not spend energy and resource and thought on this other category. Okay, so that's my thinking around that. The next thing, they want to innovate their product and marketing. I agree with, so that fans can more easily discover, immerse themselves, and talk about the stories they love, fueling fandom and the Netflix effect. I fully agree with that. That does create this kind of must-watch feeling when you see everybody on X or everybody on social media is talking about a certain movie or a certain show on Netflix. It makes more people want to watch that show or watch that movie so that can be involved in the discussion. I agree with that strategy. They've done a great job with this already, so I like that. And then finally, to tap into additional revenue and profit pools, in particular scaling advertisements to become a more meaningful contributor to the business in 2025 and beyond. I'm totally on board with that. I think introducing ad-supported was a great choice for Netflix. It opens the market to more customers that don't mind watching advertisements. Not everyone is like me. I get annoyed with advertisements. So whenever I have the choice to pay a little bit more to get the ad-free version, I'll choose that. I'll pay a couple of more dollars so that I don't have to watch advertisements. But not everyone is like me in the world, right? There are some people that say, I don't mind watching an occasional advertisement if it means I get to save 50% on my Netflix subscription or get YouTube for free. I don't mind watching a few advertisements. I know a lot of people like that. So by offering that, they open themselves up to more people and more choice. More choice is always good for customers. And so I agree with that there. So I like where Netflix has been. I like their demonstration of their customer value proposition. And I think these categories of focus, I agree with for the most part. And I'm open to being wrong about the investment in games. They've already demonstrated that they're good at making movies and they're good at making shows. So maybe they'll be good at investing in games. So I'm open to that, but that's the area I'm a little bit hesitant about. The rest, I like it completely. So to answer the question, should you buy Netflix stock before it announces earnings, or should you buy Netflix stock after it announces earnings? And I will say the answer to both of those questions Yes, right? You can buy before earnings, you can buy after earnings. I like the business. The valuation is still relatively fair at a forward price to earnings of 31. I don't think it's very cheap. I also don't think it's expensive. I think it's fairly valued for a great business. And I don't mind paying a fair price for a great business, which is what I feel Netflix is. I like the streaming industry. Competition is easing, right? Everyone is raising prices, offering, lowering content spending, lowering promotions and advertising. And so the industry is not very competitive. And the consumer is shifting towards this area. So I like the business. If you want a lower risk purchasing strategy, buy a little bit before earnings and buy a little bit after earnings. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.